I'm recording this video on April 4th, 2025, Friday, and the reason I'm doing this, despite the fact that we will be issuing our quarterly report in a couple of weeks, is I've gotten many concerned questions and inquiries from both friends of Lighthaven and partners of the fund. So I wanted to drop this video in light of the historic events that have taken place over the last 48 hours. And the first thing I want to just reassure everybody is that the fund has been doing well. We hedged the fund over the course of the last few weeks. Year to date, the fund is up 3%. And that's largely a result of us being very concerned about the overshadowing of the indices by AI companies, and specifically the Mag 7, and our concerns about the global trade war and some of the policies of the Trump administration. And we go into much more detail about these topics in both our quarterly letters and also our podcast, The Fiscal Fortress, that we do with an attorney, michelle.meiming. So if you're interested in more detail about how and why we hedged, I encourage you to either call me or watch those videos. And unfortunately, what we had feared and predicted has indeed come to pass. Now, I'm not going to analyze in this video all the things that are happening right now and why. And the reason is simply that it's all over the news, and all the media outlets and alternative media are analyzing this ad nauseum. But I do want to quantify the impact that the collapse of the Mag 7 and the global tariff war have had on the markets. The S&P 500 is currently down 9% over the course of the last 2 days. I want to say that again. Just in 2 days, the S&P 500 was down 9%. Year to date, the NASDAQ, which is very applicable because we're in Silicon Valley, that's down 17% year to date. And many of the Mag 7, which overshadowed that index and the S&P 500, are down even more. Nvidia is down 30%, Microsoft is down 15%, Apple down 25%, Google down 23%, Amazon down 22%, Tesla down 40%, and Meta, relatively unscathed, down 14%. These are incredibly trying times, and it's safe to say that there is incredible fear and panic right now. People are scared and simply don't know what to do. And I get it. It's going to be really easy for people like me and your financial advisor to say, keep calm and carry on. And that's absolutely the right answer. But there's a ton of emotion about the world, about our country, and of course, anything that impacts our hard-earned money. And so while I won't be able to help you ease your pain, I believe that I can provide some advice that I think could be very helpful to you. So what should we do in these very difficult times in the stock market? The first thing I would do is acknowledge that this is not like before. And I know I'm a huge fan of Warren Buffett. I understand and I absolutely believe in the value of buying and holding stocks, keeping calm and carrying on rather. But if you doubt that now may be different than previous times, I would submit that you consider the following things. Obviously, Exhibit A is the trade war. The trade war has upended trade relationships that have been in place for more than 50 years. The second thing I would point to is the fraying and arguably destruction of long-standing relationships with U.S. allies, many of which have stood since World War I, more than 100 years ago. And I'm thinking of countries like the United Kingdom, France, and Canada. Closer to home in Silicon Valley, AI. That is going to completely disrupt many professions and the white-collar workforce. This is something that some people have said is on the order of magnitude of the Industrial Revolution, how it completely changed agrarian society. And the polarization of people on the left and the right. As a former lawyer, I'm very, very concerned, and I think you should be concerned about the looming constitutional crisis of the executive branch not complying with court orders. And I had lunch today with a good friend of mine, Amar, who made a really good point that today, more than ever, there is great instability. And it reminded him of the period of time right before World War II, when the United States put tremendous tariffs on Japan and essentially backed Japan into a corner, causing them to declare war on the United States and attack in direct response to those tariffs. And so this is a time when any one of these things, or several of them in concert, could be catalysts for a big shock. And if that happens, there will be severe economic consequences and casualties. And I want to remind people that although we've been in the last couple of decades experiencing tremendous growth in the stock market, that big drops in the stock market are real as well. I remember when there was a more than 50% drop in the stock market during the global financial crisis. I remember a similar drop during the dot-com bust. And I also remember, long decade-plus periods when the stock market went sideways. I was very young, but in the 70s and also in the 2000s. So I don't want to be a pessimist. I'm an optimist at heart. I do think that ultimately things will be okay, but I would not blame anybody for feeling like right now there's no place to hide. I will say that despite the carnage in the stock market, there have been things that have held up well. And I'll give you some short-term examples of things that have held up well, and I'll give you my advice for the long term. In the short term, gold has hit all-time highs. This will be a surprising comment, but Bitcoin has done well in the last 2 days, despite equities collapsing and many people absolutely convinced that at this point, crypto or Bitcoin is a risk-on asset that is highly correlated with the stocks. The last 2 days don't bear that out. Bitcoin has not collapsed and has actually gone up slightly. And bonds, something that people have moved away from. Those continue. Those have done well, and in fact have appreciated this year. In the long term, my advice is the same as it's been for many years. I would buy great stocks, ones that have terrific fundamentals and business models, ones that have a competitive advantage. Buy them when they are cheap and hold on to them. And although I can't tell you definitively that now is the time to buy, I would absolutely start putting together your shopping list, and that's where I'd be looking for opportunities. And lastly, I want to give you a shameless plug. If you want something that is a great long-term investment and can weather short-term fluctuations, then I would encourage you to consider a long-short equity hedge fund like Lighthaven. Thanks very much for watching, and feel free to contact me if you have any questions. Be well.